Let's talk about the housing market because mortgage rates rose slightly from last week, continuing to pressure potential home buyers. The average rate on the 30-year fixed rate mortgage rose 6.78%. That's just a basis point from the prior week. The moves are still weighing on buyer appetite, and potential buyers are waiting to see some relief. So for more on this, I am joined by Orphe Divounguy. He is a senior economist at Zillow Home Loans. Orphe, it's great to have you on to discuss this. Thanks for being here. So I want to talk about how the Federal Reserve's potential and highly anticipated September rate cut could be impacting home buyers right now. If you are currently out there looking to buy a home, should you just wait until October?
Well, first, thanks for having me. I think people are very excited about the prospect of the Fed cutting interest rates, but I don't think that lower rates will translate into lower mortgage rates immediately, as some expect. I think mortgage rates are likely already reflecting Fed expectations. And if the Fed delivers fewer rate cuts or none at all, we're likely going to see some upward pressure, not downward pressure on rates. You take that and you add growing fiscal deficits. The fact that the government needs to borrow to fund its operation means that the pressure isn't likely to abate anytime soon. We just got this Q2 GDP numbers that shows the economy is pretty strong. That will likely put upward pressure on yields. So you have all those factors, and I just don't think the relief is going to come from rates necessarily. I think that the encouraging signs for potential home buyers is the fact that the housing market is rebalancing, that a quarter of sellers are cutting their prices, that inventory is 23% higher than it was a year ago. And so those are factors that could help as price growth continues to ease.
So when is the best time to buy then if you are a potential homeowner?
Well, look, right now we're seeing home sales have fallen by 5% in the last month. Existing home sales fell by 5% in the past month. But with mortgage rates kind of where they're at and the labor market remaining somewhat on solid ground, right? You're looking at potentially buyers turning to new construction. New home sales were essentially flat. They fell by 0.6% last month. And my feeling is that as we see more and more new homes coming on the market, and buyers might turn to new homes, you also have the fact that 61% of builders are actually offering incentives to potential home buyers. We're talking about rate buy downs, but also some price cuts. And so you combine those factors, and it's likely that new home sales could potentially start increasing again.
One other thing I want to ask you about is this research from Zillow about the number of $1 million starter homes. I want to get that number from you, but it freaked me out. This idea that starter homes you're looking at $1 million. That's not good news for someone who has yet to buy a home.
Yes, there are many cities where it's now going to take you you're going to need a lot more in order to step on the first rung of the housing ladder. Those cities are concentrated in those expensive coastal markets. Basically markets, people want to live in California. They want to live close to the sea. They want to live near these productive job centers. But unfortunately, supply of housing lags in those markets. And what we learned essentially is that the markets with the most restrictive building regulations are markets where a starter home now costs $1 million or more. And those are also markets where home ownership rates are some of the lowest in the country.
I want to end on the refinancing question for those who are looking at interest rates right now and thinking, well, I can just buy and then refinance later on. Talk to me about your advice for those folks.
Look, homeowners are sitting on near record home equity, and the real value of their mortgage interest payments has actually declined during the pandemic. And so renters, right, potential first-time home buyers are the ones that have really felt kind of the pain, right? For the last 3 years or so, we saw wages increase much slower than rents. Rents are now 33% higher than they were before the pandemic. And so during that time, we saw the value, the the wealth of homeowners really increased much faster than that of renters. And so the benefits of buying are still there for most people. And so, my advice to potential home buyers is to start early on your journey to home ownership. And that really means getting pre-qualified first, right? Zillow came out with a great tool called Buyability. And what Buyability does is it allows potential home buyers to type in their credit score, and it actually shows them the likelihood that they can afford the home they're actually looking at, right? It actually changes and fluctuates as mortgage rates change. We've seen large fluctuations. And so it's really important to be able to get the accurate information right away in order to make the decision to jump into the market. And I think once you've pre-qualified yourself, essentially, the next step is to talk to a loan officer. A Zillow Home Loans loan officer can actually be helpful, potentially highlighting areas where you can improve your credit score and how to get the lowest possible mortgage rate. Really, the focus should be on getting more people home, and Zillow's trying to do that.
All right, Orphe, we got to leave it there. Really appreciate your insights and time. Thank you so much. That was Orphe Divounguy. He's a senior economist at Zillow Home Loans.